Sure.
Let's get Raamdeo into this conversation. He joins us from the Motilal Oswal Securities offices. Raamdeo, at Motilal, what's the view on this budget? The markets have not taken too kindly to it. There are a lot of sectoral segments which are very volatile. We'll come to that. But on the whole, what's your key takeaway?
I'm kind of, I was looking for one or two things in the budget. One is that in my mind, current account deficit and the current forex crisis was, kind of a big thing. And I don't think the budget has addressed adequately to that particular thing. And hence you see the rupees already started to weakening. Second is that I think a lot of problems can be sorted out only if you unshackle the business environment here. And though Finance Minister spoke to that that kind of sentiment, but I don't see any any enabler which actually makes people feel confident, safe, and India to be the best, a priority place to do business. That kind of sentiment, I think that was an opportunity for at this juncture to create at least in the speech. What you do is actually out of the budget, but I think creating that conducive environment for business is extremely important, and that's what is missing for last 2-3 years here.
Raamdeo, you hit the nail on the head. The Finance Minister seems to acknowledge all these problems. He says current account is a problem, does very little about it. He says infrastructure is a problem, does very little about it. But how do you think the markets are going to read this? I'm asking in the context of, do you believe the concerns raised by the rating agencies have been allayed, at least for now?
I don't think it is that serious a thing. I think rating agencies and as far as the budget is concerned, people are looking more at fiscal account, fiscal deficit slippages, and whether Finance Minister can stick to his 4.7 or 4.8. I think that is those are the focus areas right now by these agencies. But how do you sort out this problem? You can live with a lower growth, you can live with some lesser job or even higher prices. But how do you manage a beast called rupee dollar parity? So something which is completely out of hand. Your current account deficit 5%. Your growth is import intensive. So you have to do something very big to make sure that your imports are less attractive and exports are very, very attractive. You have to pay a price to bring down your current account deficit from 5 to 2.5. There is an effort on the fiscal side, but where is the effort, visible effort on the CAD side?
Now let's look at the fiscal side a little more, Raamdeo. Disinvestment target of about 55,000 crores. We've never really met targets in the past, but my question to you is, in the current situation where a lot of people believe that our markets are overbought because of the kind of liquidity-driven up move that we've seen, and relatively we're looking expensive, how do you see the government actually meeting this target?
It looks tough because unless you are completely relying on foreigners to buy whatever you want to sell, and you are banking too much on continuity of FI buying through the year like last year. So I think incentivizing the domestic, they showed concern for the domestic investor. But if you look at the inside of it, what they did was, I think in Rajiv Gandhi that scheme, they made the eligible criteria from 10 to 12 lakhs, and I think from mutual funds to direct stocks. So I don't think that's a big enough measure to make the market attractive place for equities. I think, in fact, dividend, which is I think one of the core of the purpose for which people come to the markets, I think they have actually increased the surcharges on dividend distribution tax. So effective dividend distribution tax has actually been hiked. So actually investors, not the traders, investors will end up paying more. So I don't think they are concerned about what the domestic investors they do in terms of whether they subscribe or not.
Shanti, I have a fairly simple question. Does this budget create jobs?
If investment happens, it will create jobs. So I think it goes back to the broader macroeconomic question. What does it take to spur investment cycle? We talked about stability. We talked about government stopping to crowd out private sector. We talked about reduction in interest rate. Important in sentiment change for people to come forward. Has all of that happened? Perhaps not. The sentiment is still, is still confused, if I may say so. Do we invest? Don't we invest? Clearly, investment allowance is positive. Interest rates, we hope, will come down. But ground level policy matters and things that, make it easy for people to invest is still a problem. So I'd say that the budget is a relief that it did not have some of the aspects that people expected. But I think it's time to move on to the fundamentals and say, how do you tackle issues on the ground? How do you make this happen? How do you make 4.8 happen? How do you spur exports? How do you ensure that current account is listing? It has to be business as usual and tackling the problem.
And that was the undertone. I mean, with the quote that the finance minister read at the end, that was the undertone. It's about implementation. But Rashesh, let me come to you. Will the ball now be on the RBI's court to really revive sentiment and the investment, cycle? Given that a lot of hopes are riding on, say, a 25-50 basis point cut at least by June. Do you see that happening after this budget? And do you think that's what's going to trigger growth?
Yeah, I think on the whole, if the government is projecting 4.8% fiscal debt, in the coming year, I think the fiscal consolidation is happening. RBI has clearly said that they will look at fiscal consolidation as one of the inputs for cutting rates. We do think inflation is coming off as even the economic survey has estimated yesterday. So given that, we do think between about 50 to 75 basis point cut in the next couple of quarters should be possible for RBI. RBI has room for that, and I think, as we have all been saying, we need to revive investment, we need to revive growth, we need to bring down cost of capital, increase availability of capital, and I think all that will happen. So I think RBI should follow through after this, and on the whole, I think what we have achieved today is also another step, a small step in reviving the confidence of growth coming back. I think we'll need a lot of small steps, because confidence, if it is gone once, takes a long time to come back. So I think all this, what has been happening for the last 3-4 months, are all small steps in trying to get confidence back. And I think if RBI follows through on that, it will help the cause.
Right. Raamdeo, a last question really. Let's get specific on the market. Sectorally speaking, pretty much everything is down right now. You've seen a lot of pain coming into the capital goods space, automobiles, banks, and even retail. What would your bets look like going ahead now that this event is over?
Actually, I don't see anything in the budget which should actually elate the investors or significantly disappoint any section of. Specific the companies or sectors are not that badly impacted. If anything, say investment allowance and those kind of things can actually be helpful in bringing down the effective tax rate in some of the profitable growth-oriented companies. When they put up the projects, I think they can get upfront tax break, and that will bring down the effective tax rates. So growth-oriented, profitable companies will see their tax rates coming down in the years to come, and hence profit. You could see some good increase in the profit. So on the whole, I think, see, the tax mobilization, if you see, they have direct taxes have taken only 13,000 crores and indirect taxes only 4,000 crores. So in a 15 lakh crore budget, 15,000 crores tax proposal is of no significance at all. And most of the, even this 13,000 crores is coming from surcharges which is imposed on the high tax paying individuals and corporates. So my sense is there is nothing in the budget to disappoint the market. But maybe some expectation was built which is not being met. There's no headline, anything big, and I think good point of the budget is that it has refrained from being very populist budget just ahead of the election. So I would say on the whole I'll give a positive mark rather than negative, but market has its own mind.
All right, Raamdeo. Many thanks for joining us with your perspective, Raamdeo. Rashesh, Shanti, many thanks for joining us indeed. It's a bit of a break, but we continue this conversation on Budget 2013. Whether he has delivered or not, We'll be joined by a bunch of experts from London. Back in 2 minutes.